Hey, Mark, that was fun. We had a good little discussion there, and I'll be honest with you. In doing a little research for this, I found something that I was not aware of when we were talking about our subject matter. So this was very beneficial for me. I actually learned something new about a loan program. How about you? What'd you find exciting or something unique about the podcast this week?
Chris, I love the fact that I feel like every time we record one of these, one, I learn something new, but two is, as I've said before, there's opportunities for so many people out there. We've talked about first-time home buyers. We've talked about lots of other loan products, all this stuff. Today are a couple of myths that have come along where people have said, I can't do it. I can't buy a home. And I think you very well dispel those myths and say, no, there's absolutely opportunities for people here. And I loved the conversation we had.
All right, Mark, sounds good. Everybody stay tuned. Here we go with the next podcast on SoCo's most interesting podcast.
Hello, everyone, and welcome back to SoCo's most interesting podcast. I am one of your hosts, Mark Ditkof, with my amazing co-host here, Mr. Chris Bongirno. Chris, are you having a wonderful day today?
I am, Mark. So far, so good. I can't complain. Of course, I'm here with you and our viewers, so that makes it an extra special day.
Extra special indeed. All right, Chris. Well, today I want to talk about a couple of myths that I've had some buyers come to me with and say, hey, I've been told I can't be helped by with home loans or anything like that. And the reason is two things we're going to talk about. ITIN home buyers, so people that don't have a social security number, but they have an ITIN. And the second one is I work in the marijuana industry, which is legal in Colorado, but not federally, right? And so that's a concern that people have in regards to getting home loans. So can we talk about options for those two buyers today?
No. Yes,
Darn
of
it.
course we can. We can. So, Mark, let's talk about ITIN first. Let's get that one going. And that stands for Individual Tax ID Number. So there's a number of cases where buyers might have an ITIN number. These are folks that are typically not U.S. citizens. They will be either a permanent resident alien or a non-resident alien or a DACA recipient. But not always. There are foreign nationals that as well could have an ITIN number. Just real quickly, an ITIN number allows someone with temporary legal status to have employment in the United States without a social security number. And then once they have a permanent status, they can end up with a social security number. At least that's my understanding of when an ITIN number would come into play. Any questions on that, Mark? Since this might be a little bit, even new for you in terms of the details that I'm talking about.
Yeah, so it's really somebody who's here, they're working here, but they're not officially citizens, but they say, hey, I'm going to be here a while, I'm working here full time, I'd like to buy a house instead of renting, right? And so it's what loan products are available, if any, for that kind of buyer, because my understanding is a lot of it, like when you sign documents to purchase a home, they ask you for your social security number,
sure,
right? Or your business identification number, depending upon what you're buying. And so what options are there, real options for these kind of buyers?
And the other thing to keep in mind, Mark, is that the ITIN number allows that individual to report their income both federally and at the state level so that they can legally pay taxes on their income. And that's important for us on the lending side to be able to document their income. So if someone does have a valid ITIN number, there are loan programs that are available for them. And what I think would surprise a lot of people is just a regular standard conventional loan through Fannie or Freddie Mac, the Federal National Mortgage Association or the Federal Home Loan Corporation. are available, and that's through just about any lender. There are some specific documentation requirements, and you're limited to having 20% or more down. But a lot of buyers meet that criteria, and if they do, it's a very attractive interest rate, less overlays and underwriting conditions that someone has to work through with a lender if they can use one of those standard loan programs. So, surprisingly so, that's available through a regular conventional loan with 20% down.
Okay, so they have to have, this is a situation though where it's kind of old fashioned, right? They do need 20% down to
Correct.
use a conventional loan. They're not going to have 3, 5, 10% loan products.
Correct. And they're
Okay.
only owner occupied, so no second homes, no investment properties. And that's the standard program. Now, an individual lender may have overlays that restrict that program, or an individual lender may not offer this program. And there's reasons for that, which is a podcast for a different day. So it's important that if you are a person that has an ITIN and you talk to one lender and they're unable to offer what I'm talking about, I would reach out to another lender and get some additional information. Your real estate professional is a good person to reach out to and get some recommendations of who might have some more information on that. Now, separate from a regular conventional loan, Mark, there are what we call non-qualified mortgages. And this is going to be mortgages that fall outside of the standard conventional loan programs. And surprisingly, with these loan programs, ITIN buyers can buy a home with as little as 11% down. So not quite, our typical first-time home buyer programs with $1,000 or 1% or 3%. And in this case, not even 5% down, but with 11% down, they can take a look at purchasing a home. It's important to mention here that there's specific requirements in terms of documenting, a valid credit score in most cases, employment history, income documentation, very similar to what we would have on a regular conventional loan. And when we were talking about those through Fannie and Freddie, keep in mind we're verifying assets like bank accounts for down payment and income. And we'd be doing the same thing on these particular programs with 11% down.
That sounds like a much better opportunity for a lot of people, at least in our experience. The lower the down payment, the easier typically home ownership can be. And so is that a situation where non-qualified, so my understanding is non-qualified means they're not going to be able to sell that loan on like the secondary loan market. Is that right?
Well, without getting too much in the weeds, they probably can, but they're selling it to Wall Street or investors rather than through Fannie and Freddie, which a typical conventional mortgage would go through. Okay. The other thing is when we're talking about these non-qualified mortgages, in most cases, if not all, the buyers are going to need to have reserves in addition to the down payment. So that's money left over in the bank to cover, monthly payments in case there's some kind of disruption on income. So make sure you check with your individual mortgage lender to find out what those reserve requirements are going to be. Two other things I want to bring up about ITIN with the non-qualified mortgages is that, what we've talked about right now are full documentation loans where we're verifying the income and the assets. We do have programs, and most lenders who deal with non-qualified mortgages have available programs where we use bank statements to document income. Very specialized guidelines in there. Make sure you speak with your lender about that. But if someone is self-employed with an ITIN, and that does happen quite a bit, there are programs available that use bank statements to verify income as opposed to tax returns. And the last one I want to bring up is the DSCR loans, where you use rental income on a rental property to qualify for the loan. You're not really using traditional sources of income like W-2s and pay stubs. Person is qualifying basically on the rent they're going to charge on that investment property those are available for ITIN borrowers as well. And again, depends on the lender that you're working with and whether they offer non-qualified mortgages and if they offer these particular non-qualified mortgages. So as I normally say, this is not an offer to lend. Talk to your individual lender and get some details, and then you can apply for a loan and figure out whether this works for you or not. But they're available, Mark, and I think a lot of people miss that opportunity because they don't think it's something they can do.
It's absolutely something they don't think they can do, because I've had multiple buyers in the past come to us and say, yeah, I've been told I can't buy because I don't have a social security number. So a couple of questions for you, I guess. So is it common for lending institutions to offer non-qualified mortgages, or is that something that you're going to kind of have to find a more niche lender to get into that space?
So I can't speak for everyone, obviously, but as a general rule of thumb, I would say most lenders offer some kind of non-qualified program, whether it's a bank or a non-bank lender. And you're really going to need to reach out to the individual lender, whether it's a loan officer or an 800 number or online, and get details as to what they offer. And again, I would recommend that if you're having difficulty on that end, talk with someone like you, Mark, a real estate professional who can kind of give them some direction and have some background on someone that's available to answer those questions. It's a very specialized program. There's a lot of things to be aware of when you're working with someone with an ITIN number. Comes back to what kind of credit history do they have? Do they or do they not have a credit score? Do they have one credit score or the traditional 3 credit scores? What happens if there's a co-borrower who is a U.S. citizen and one that has an ITIN? There's lots of variables, so it's important to work with somebody. I would say in most cases that's done these before, has some experience, and can help take care of you individually.
Okay, and so there is one conventional loan product, 20% down if you want to go that route. Otherwise, it sounds like there's multiple non-qualified products that really, again, like you said, you need to find a loan officer or lending institution that has options and just really go through all the different options to see if one of them can work for you. And if
Absolutely.
not, yeah. And if one of them doesn't work for you, then maybe it's, then you set up that game plan, right? Which one is going to be the most attainable, the quickest, and kind of put your game plan in place to get there as soon as reasonable, right?
Yeah, absolutely. And just a quick note, what I've talked about is probably not everything that's available out there. So is it possible that there is an ITIN loan program with 5% down? Absolutely. There may be a non-qualified program out there. I'm just not aware of it today when we're recording here in October of 2023. So that's why I'd recommend, if you are an ITN buyer or know someone, I would talk to your real estate professional. I would talk to mortgage lender. I would talk to more than one mortgage lender and see what's available.
What I'm going to say, if you are a loan officer or mortgage lender out there that has a product that we haven't talked about right now, and something, especially something that's less than 11% down, I would love you to reach out to us directly, put it in the comments or just DM us, whatever it is, and tell us about that program. We'd actually love to have you on here to explain that. And again, just giving more options for
Absolutely.
the people of Southern Colorado. So, okay. So I think we've covered ITIN pretty comprehensively for what we're looking at today. So the next one I wanted to talk about, which is becoming more and more popular as the marijuana industry grows, especially in Southern Colorado, grows. People have come to me before and said, hey, I work for this. I've been told I can't get a loan, right? I work at a dispensary. I work in the fields or whatever that is. Chris, are there options for those kind of U.S. citizens? So they have a social security number, but they work in the marijuana industry. Can they get a home loan?
Yes. So long as they qualify under all of the program guidelines. Let me say it this way. They're not disqualified for a loan program because they work in marijuana. That's probably a better way to think of it. So one other quick note, I just want to touch base on ITIN. In most cases, the non-qualified loan amounts can go up to $1 million or more. So just to throw that out there because I didn't cover that. So with marijuana, Mark, there's a distinction, if you will, between employees of a marijuana producer and those who have ownership in the company. And ownership is defined for this particular discussion of any ownership. So 0.01% ownership of the marijuana business, in our case, is ownership of the business. And again, there are conventional loan programs that are available for borrowers, buyers who work in the marijuana business. And one of them is through Fannie Mae. Freddie Mac does not offer loan programs, at least at the time we're recording this, for people that work in the marijuana industry, but Fannie Mae does. And the important things to remember here is that the subject property cannot be used for marijuana cultivation or sales. Two, the individual cannot have any ownership of the business whatsoever. None, zero. And so aside from that, if they're W-2'd or 1099'd, and I don't know that they would really be 1099, but they technically could be, I would suspect. So if they're W-2'd, get a pay stub, they would be eligible for typical Fannie Mae loan programs, no other overlays or special conditions for that. So loan programs that allow for 1% down and down payment assistance programs and 3% down first time homebuyer programs, depending on the source of the down payment assistance, would all be available through the Fannie Mae conventional loan program. All other underwriting criteria remains the same in terms of how long you've been on the job, documenting income, credit scores, credit history, all that kind of stuff. One other thing to make mention of is that the assets or the bank accounts used for the transaction, the assets can't come from marijuana cultivation. So just keep that in mind. So like self-employed would be the issue with that.
Okay, but if you're W-2 and paid through that company, that's not what you're saying.
Correct.
Okay.
Correct.
And what about, so you could do conventional, any of those typical loan programs, as long as it falls within those guidelines and you qualify normally. There's no extra overlays, like you said. You don't have to have a better credit score or anything like that. FHA, VA, USDA, any products in that realm that fit this person?
Negative. Okay. Those all prohibit or make those particular buyers ineligible for those loan programs.
And that's because that industry is not federally regulated and those are federally backed loans. Is that my understanding?
I would say that's the case, Mark. I don't have particular insight as to what's driving those decisions because technically Fannie Mae is in receivership with the federal government. So, I can't say 100% that that's the issue, but I would say that that probably has an influence in it.
Would you expect then that if marijuana ends up being legalized across the country, that might be something that opens up, because then it's going to be like working at any other pharmacy essentially, right? Or at a liquor store or any other thing like that. If that happens, do you think those programs, FHA, VA, USDA, would potentially open up for somebody that works, maybe still not in ownership, right? But as an employee for those institutions?
Yeah, I would think that's likely. In fact, I think it would be likely that they'd open it up to employers, owners of those industries as well, because there wouldn't really be a restriction at that point. I think to some extent, it's that underlying factor of it not being federally legal. But I think it also goes to the fact of, technically speaking, those industries can't have bank accounts right now. So I think the potential for money laundering might be a concern for those entities. I don't really know. I haven't done the research to find out. Normally what I focus on is what's available and not looking at what's not available and the reasons why, because I'm just trying to get customers taken care of at our current time. But I would think a part of that has to do with those money laundering issues, with it being primarily a cash type business. So hopefully, I know The federal government is looking at making bank accounts legal for those businesses, allowing them to use the Federal Reserve and the clearing houses and so forth. And if we get to that point, we may see those things change. I do want to mention, though, that on the non-qualified mortgage side, there are loan programs available out there for owners of marijuana businesses. They tend to be limited programs, credit score requirements, credit history requirements, income requirements are tend to be a little bit more restrictive, and down payments are typically significantly higher. What I have found in my day-to-day stuff is the best thing to do is talk with a lender that has experience with those, because in most cases what we're doing is reaching out to a lender. So me as a loan officer, my particular company doesn't offer a non-qualified program in-house that will do marijuana loans for an owner of a business, or a home loan for a marijuana business. But we have access to lenders that do offer those programs. And usually what that looks like for me is picking up the phone and calling my representative at that lender and talking through to see if it's a fit, and then doing a loan application and getting it submitted. So there are very particular things that you need to be concerned about, and your loan officer needs to be concerned with. Again, not an offer to lend. No one's pre-approved through me talking about these examples, and things change, even day to day, but certainly month to month, year to year. So make sure you reach out to your lender and have them get some details on what's available. But the important thing to remember, it is available, at least in October of 2023. And we can get you some specifics on what is available in your particular situation. Because I can tell you it's different than if it's a limited partnership versus a general partnership versus a sole proprietor. So all of those things do go into that evaluation of your particular loan program that's available.
I love it, Chris. I think that's really good information. And I think the moral of the story today is there are products available for just about everybody, even those that think they're not eligible. And that's, the ITIN and the marijuana industry that we talked about today. But then I think that would expand to, if you have ever been told you are not eligible for whatever reason, that might be just that one lender, and it's not going to hurt you to talk to somebody else that might have products available that fit your needs. Am I right?
Yeah, absolutely. And I recommend that for everybody, even if you're doing a regular run of the mill FHA loan and, you're W-2'd employee and everything is just golden, and you are told you're not eligible for one reason or the other. Maybe it was when you had a bankruptcy or a foreclosure, or you've only been on the job for 6 months, or you've only got overtime for 14 months. And so you don't qualify. I would recommend everybody who is told that, talk to a second lender. At least run it by a second lender. Doesn't mean you need to do a loan application, have your credit pulled, but have a conversation. Because there's a lot of lenders that offer a lot of things that other lenders don't. And there's a lot of loan officers who have experience with particular situations that other loan officers don't. So it's important to do that.
Chris, this was a fun conversation today. Thanks for leading it.
Sure, absolutely. My pleasure, Mark. I appreciate you giving me the opportunity to talk about programs like this. And like Mark said, everybody, if you are a loan officer or a lender and you would like to add to products or insight or anything, I do not portray myself as the Mr. Know-it-all of lending, especially with these specialty loan programs. Please either DM, like Mark said, either one of us, or put comments down below. We'd love to have you on as a guest and kind of flesh this out some more if there's more to talk about. Mark, don't you agree?
I think that would be very helpful for a lot of people. So, Chris, if somebody wanted to find you, get a hold of you, how is that going to happen?
In the comments down below, Mark, most of our folks are watching these through YouTube. If not, go ahead and get on YouTube and check it out there. And we've got some information of how to contact me there. How about you, Mark?
You can find me on any of the major social media platforms at Onyx Home Group. That's Onyx with a Y. And I want to encourage everybody, definitely go to our YouTube page, like and subscribe. And that helps us get in front of more eyes so we can help other people learn about options in Southern Colorado. So Chris, it was a pleasure. And I'll see everybody next time on SoCo's Most Interesting Podcast.